Alrighty, in today's video we have a lot to talk about, but it's going to be a very, very important video. We're going to talk about how Bitcoin is sitting at a key inflection point. We'll also be discussing the contagion risk and how people are maybe not thinking about this correctly. We'll also be talking about the upcoming FOMC meeting and how the market is currently priced for that upcoming FOMC meeting and why it's so important for Bitcoin, not only in the near term, but in the long term as well. I also want to talk to you guys about how I'm seeing something very, very concerning over here on the Mango dashboard and how it's lining up with the charts. Good morning, guys, and welcome back to the Mango Market Update. And oh my, a lot has happened since I did one of these. Wow. Crypto has just gone through one of the most catastrophic events it ever has, and I truly believe that this is worse than the Mt. Gox event. I honestly never thought that we'd be fortunate enough and misfortunate enough to go through a Mt. Gox-like event. I say fortunate enough because we get to experience all of those emotions. We get to bear the battle scars of going through an event like this, surviving an event like this, and hey, telling tales of this event. I say unfortunate because we got to deal with the consequences, right? The destroyed wealth, the destroyed careers of many and many of our friends, and the pain that almost all of us have had to go through because of this incident. But hey, if you survived, if you even remotely survived, let me tell you that there is immense opportunity ahead of us. Massive opportunity like you thought you would never, ever get to see again. So as bad as you are feeling at the moment, guys, trust me when I say this, you are being given an opportunity of a lifetime. This is coming from someone who traded through this entire run all the way to 20,000 and then through all of this, guys. Believe me when I tell you that you are being given an opportunity that is even better than what we saw over here. So all of that pain, all of that agony that you are feeling, I want you to take it and park it on top of the shelf where you can't see it anymore. And look forward and focus now on working on the opportunity that is being presented to us. Because I guarantee you, if you do that, in around a year or two, you're going to look back at that shelf and you're going to smile fondly. All right, so with that being said, guys, let's go ahead and get started with the overview because we do have a lot to talk about today. And I want to start with Bitcoin on the higher time frame, its current stance, its current picture, and what we can look forward to Bitcoin doing, right? Are we going to see further down or are we going to see a move to the upside over here? Now what you're seeing over here is a screenshot from a impromptu live that we had on the Discord that delineates some important levels and the psychology behind those levels, because we are sitting at a very important level that not too many people are talking about, right? So I want to talk about that today and why this is going to be really important in the days to come. I also want to spend some time discussing the increasing risk of contagion, and we're going to draw in from the events from the recent past all this year to make sure that we don't get caught off guard once again. We're then going to go and do a quick update on the trade that we took, looking for that big move to the upside to around $30,000. But instead, we got this move to the downside. I'm going to talk about how I managed the trade, and it's going to be a quick educational session. We're going to try to spend as much time as we can on this one because it's really important. But this gives us a good segue into the next important topic because guys, I truly believe that Bitcoin would have been sitting around $30,000 right now had the SBF incident not happened. If you look at what traditional markets are doing, right, that takes us to the next important topic, which is the upcoming FOMC meeting in December 14th, right? The second week of December. Because our analysis on the target rate probabilities along with the Fed futures curves allowed us to predict that, hey, equity markets are likely going to see a rally, thereby also having a likelihood of Bitcoin seeing a rally, and that's lining up with what the charts are telling us. But alas, we had the Black Swan event, the Black SBF event is what we should call it, and the trade did not go well. But that does not mean that there isn't significant edge in assessing and analyzing what is going on over here. So we're going to be circling back to this and then discussing how we can use this to our advantage in positioning on Bitcoin. And alrighty, let's go ahead and get started. We'll erase these drawings really quickly. And again, like I said, over here we're looking at Bitcoin on the weekly time frame. This is a screenshot from a impromptu live Discord chat that we were having, right? And we were discussing the key levels and the psychological importance of each of these levels. And there's a certain level I think far too many people are ignoring, and that's this level coming in right over here at around 16,600. And the reason this level is so important, guys, is because it's a key psychological inflection point of the previous bull market high. Let me explain this to you guys quickly. Each time you see an aggressive trend, and this applies on any asset, if you see a trend that goes something like this, right, aggressively towards the upside, when that trend eventually ends, right, and begins a downtrend, you can now look back in hindsight at the point in which that trend failed to continue, right? So in this example over here that we've drawn, this was that point where the market tried to push up further but failed to do so, right? It was rejected over here, put in a lower high and pushed down instead to make in a lower low, a lower high, and start its downtrend instead. That inflection point is going to be very, very important historically now if we are to ever come back up there to either retest it or to retest it from the upside, right? So the 2 points in the 2017 rally is essentially the high, the 2017 high that we've marked out now, and this attempt to break the high on the push towards the upside that failed, right? So what happened, guys? Bitcoin put in a nice aggressive uptrend going up to around $20,000, pushed down, tried to push up, got rejected at $16,000 and started an aggressive downtrend that lasted years and years before we finally broke to that level towards the end of 2020, retested it, defended it, and then had the massive push up to around 50,000. And now we are back at it around 2 years later, 2022, right? So we're sitting at that key level, guys. Now, this level is not a level where a lot of volume has been traded, but it's still an important level, right? Not lots of volume has been traded here, but it is still a key level. If the bulls don't defend this level, the next zone that we're looking at, guys, is this zone that I have delineated over here for you guys, sitting around 13,900, right? 13,900 to around 11,900. So you guys can go ahead and note these levels down and mark a box, because that is going to be an important zone, right? That's an entire area of liquidity that could get tapped into. You're going to see a lot of buyers start coming into DCA over here. Now the big question is, do the bulls defend this level at around $16,600? This key inflection point level, guys. If the bulls don't defend this level, we are going to start seeing Bitcoin prices of around $11,000 to $13,000 very, very soon. So we're going to circle back on over to the charts and we're going to look for signs as to whether or not the bulls are actually looking to defend this level, because it is the last line of defense in the sand. But before we do that, I do want to talk about what's going on over here in regards to the entire FTX situation. Is there a risk of further contagion, right? And there are a lot of people saying that, you know what, this is it. This is the last capitulation event. There's nothing more to come. And I want to ask you guys this question. Are you so sure, right? Are you sure about that? Because people said something very, very similar when 3AC capitulated in June 14th. Now, let's go and look at the timeline really quickly. The Luna episode, the Luna debacle happened on May 7th, right? It took around a month and a week, right? Let's say a month, a 1 month time difference before the contagion from Luna affected 3AC, right? So it took 1 month for 3AC to then capitulate and get liquidated. It then took us 5 months to see the consequences of the Luna and 3AC situation spill on over to FTX. So the contagion was way bigger than we thought, and only took us 5 months to see the next domino fall. So who's next, and how long could it take? How long can they cover up their illiquidity, their insolvency? Could it be Genesis, right? Could it be Gemini? Now this is what we're hearing. This is what people are speculating, but we don't know if it's going to be them. And because there's so much like question marks around Genesis, I'm beginning to think that, you know what, it's likely not going to happen. They're likely going to get backstopped. They're likely going to have someone bail them out. Usually the firm that gets liquidated or gets into a solvency issue ends up being someone that you wouldn't think of, right? Nobody is trying to hedge against that situation happening, and that's precisely why it ends up happening. That's why you see the crisis, because the market is not pricing in. At the moment, everyone is pricing in the Genesis situation, probably even the Gemini situation. I don't know. I hope that they are at the very least. I hope people aren't keeping funds in here when there's so much noise around this entire situation. And please, guys, please, for all of you watching at Mango, please manage your counterparty risks. It's something that I've been talking about ever since I started this channel. One of the first videos I ever did, go back and look at my history, was counterparty risk, right? There's no reason whatsoever to keep all your funds on the exchange, right? But we can talk about this in further detail some other time. But I just want to say, guys, Contagion, you don't know how long before the next domino falls, and it's all hidden, right? Until we start seeing real market strength, and until we actually start seeing these highs getting taken out, assume that there's just one entity out there that could cause the next dominoes to start falling. So just be careful. Okay, moving on, let's go ahead and talk about our 4-day C-SPAN trade. If you guys do remember, we were looking for that big move to around $30,000 to around $33,000, and oh man, it really looked like Bitcoin wanted to do just that. It was putting in a really nice structure, closing above the 4-day Tenkin, but nope. Instead, we had SBF come in and ruin the party, and we saw this. Now again, we don't ever want to pawn off a failed trade onto somebody else, right? You always want to take responsibility for your trade, and once you get into that mindset, you're always guarding against the trade going wrong. Because guys, even if there is a 98% chance of success on your trade, right? You have to take into consideration that 2% chance that your trade goes against you, right? So are you willing to bet the entire house, the entire career on the fact that the 2% does not happen? 2% is still a chance. Okay, and the dice may roll against you. So always manage your risk. And for those of you who are in the Mango Prime, right? If you guys have access to Prime in the Discord, you should go ahead and watch the video that I did post on how I managed my losing trade, how we took a short on Link as well as a short on Sol. I wish we could go into the details of everything in today's video, but we just do not have enough time to cover it all. But again, if you guys are on Prime, go and watch that video. You guys get to see me managing my trades live. And how do you get access to Prime, guys? Simply engage in the YouTube comments, engage on the Discord, and you guys will get access to Prime. Prime is completely free, and you guys have access if you engage, and if you are a Mango seedling, right? If you're a Mango seedling, you have access by default. Okay, so go ahead and watch that. You guys get to see how I managed my trade. But again, guys, I really do think that we would have seen this trade be a successful trade. It would have been a big, nice trade if the SPF situation had not happened. Why? Because you're seeing traditional markets see a very strong rally. And why is that happening? It's because financial conditions are loosening, right? And when financial conditions loosen, liquidity conditions improve, and you see all risk assets go to the upside. And Bitcoin, guys, is a risk asset. So Bitcoin would have been having its move towards the upside as well. Not just Bitcoin, but Ethereum. I'm pretty sure we'd have been seeing Bitcoin around $30,000, and we'd have been seeing Ethereum at maybe 2.5, maybe even higher. I'm not entirely sure what Ethereum would have been sitting at, but definitely higher. So with that, actually, let's go ahead and move on over to the most important part of this section, in my opinion, because it was precisely this section that we've been discussing over the past couple of weeks that allowed us to get into the mindset that, hey, let's get positioned for a move towards the upside, even though we've been bearish and cautious over the past couple of months. In my opinion, even though the trade failed, we were on the right trade. All right, so let me go ahead and quickly explain what we are looking at over here. Simply put, this is a visual representation of how the market is positioned on what they think the Fed is going to do on its next meeting. Right? So every 6 weeks, the Fed has been meeting and has been deciding whether they want to increase interest rates, keep interest rates flat, or decrease interest rates. Now, for the past few months, all they've been doing is increasing, right? Why? Because inflation is really high and they want to tamp down on inflation. And they've been increasing interest rates at a fast pace. They've been going 75 basis points aggressively now for the past few meetings. And the market as a whole is always trying to position themselves before the Fed actually makes that decision, right? So in the past few videos, you guys saw, and with those positions, we can derive a probability of what the market thinks the Fed is going to do. So over here, we are seeing that the market thinks that there's 80% chance probability, guys, 80% chance that the Fed only hikes by 50 basis points, as opposed to a 20% chance, right? 19.4% to be a little bit more precise, that the Fed hikes by 75 basis points. That is a drastic change from what the market thought the Fed was going to do in the previous meetings, right? In fact, it's a drastic change from what the market thought the Fed was going to do even in the upcoming meeting. If you guys go ahead and look, right, right over here at the bottom table, right over here, the probability percent for what the market thought the Fed was going to do a month ago. Okay, October 14th, what did the market think the Fed was going to do on December 14th? That's what this column over here is telling you guys. On October 14th, what did the market think that the Fed was going to do for December 14th? And they thought that, okay, so right over here, guys, this row is the 50 basis points row, okay? They thought that there was going to be only a 29.4% chance that the Fed was going to hike by 50 basis points. They instead gave a 70% chance probability for the 75 basis points hike. So just a month ago, the entire market thought that even in December, the Fed was going to be hiking by 75 basis points. But now they've changed their mind. Now they're saying, no. The Fed is more likely to hike by 50 basis points. And what did we talk about in the previous discussion when we put up the slide? We said that, hey guys, at the moment, okay, let me go ahead and draw out quickly what the probability rates look like as of like a couple of weeks ago. The probability rate looked like something like this. A higher chance for the 75 basis points, but just a slightly lower chance for a 50 basis points, right? We said that, hey, if people start unpositioning out of 75 and instead position for 50 basis points, the bar chart is going to look like this, and that's going to cause a rally to the upside, right? And so the point I'm trying to make over here, guys, is understanding how the market is positioned is very, very important in allowing you to position yourself for either a rally or a move to the downside. Do you agree with what the market is doing? Or do you want to take the other side, right? That is up to you. So let's quickly summarize where the market thinks we are. We're currently sitting at a Fed funds rate of around 3.75% to around 4%, correct? Well, if the Fed actually does hike by only 50 basis points in the next meeting, we're going to move to a Fed funds rate of around 4.25% to 4.5%. Right? So this is a 80% probability that we move up only to this rate. If for whatever reason, the Fed decides to hike more than this, in that case, we are going to see a down move, right? The markets are likely going to react very, very badly to that. Now, This is only for what we are likely to see December 14th. We can go out and look at the Fed's futures funds rate curve, right, and get an idea of how the market is actually pricing what the Fed is going to do all the way up to 2025, even further actually. Now, I'm not going to go into detail on all of this in this video, but from this data over here, you can get the market's implied Fed funds rate for each one of these months, right, going all the way out to 2025. So for example, right over here on the top, you can see December 2022, which is sitting at around 95.8750. This implies a Fed funds rate of around 4.15ish, right, which is very, very close to our 4.25 target range that the market is currently predicting for the next FOMC meeting coming up in December 14th, right? So this is lining up with what we're seeing on the probability bar graph as well. Now, here's the thing, guys. If you go through all of this, you're going to see that for May 23rd and June 23rd, we are getting a Fed funds rate, an implied Fed funds rate of around 4.91 on each of those months, okay? And that is essentially the peak. That is the peak. It doesn't get higher than that. In fact, if you go to the end of the year, okay, which is December 2023, okay, not 2022, December 2023, right over here, guys, this has a implied rate of only 4.4. If you draw out where we are currently sitting, which is around 3.75, remember, guys, our current target rate for the Fed funds rate is 3.75. If you draw that out along with the target rates for December 2023, right, so end of next year, you're going to see that the market is actually pricing in a peak in May and then decreasing interest rates. So this is telling us, guys, that the Fed is going to hike up until May, or let me rephrase that. The market thinks that the Fed is going to hike right up until May, right? And then they are going to start decreasing interest rates all the way back to lower than where we are coming into 2024. And guys, this too is a change in behavior, because I've been keeping track on what the market was pricing this curve at, right? Right over here, you guys can see that the implied peak was sitting at 5.1% for the summer of 2023. Now that's dropped down to 4.91%. And the end of year rate, right, was also sitting higher at 4.9%. Now it's dropped down to only 4.4%. So if you had to redraw this curve, it would be much higher. You'd see a much aggressive curve coming in like that. Now, however, the market is saying, nah. We think that the Fed is not going to be as aggressive. We are not going to see aggressive hikes of 75. Instead, we're going to see slower hikes of 50, perhaps even 25 basis points, right? At the moment, guys, on this probability chart, you're not even seeing 25 basis points as one of the options on the bars, right? Soon, you're going to start seeing that as well, because that's what the market is going to think the Fed is going to do, and there's going to be a probability percent on that as well. So knowing this, we can start thinking about what could go wrong, what could go right for the market to suddenly change their minds as well. Because here's my concern, guys. The market at the moment, if you look at SPY, okay, I have a screenshot of SPY over here. The market reacted very, very positively to the change in expectations of the Fed raising rates from 75, right, down to 50. The market has, and this has a lot to do with the CPI data that came out under expectations. We haven't talked about that, but you guys already know that, right? Many of you guys have been keeping track of this already. But for those of you who don't know, CPI came under expectations, right? So let's say CPI, I don't know the numbers off the top of my head, but I think expected was 8% and it came in around 7.2%. So the market is essentially saying, hey, what the Fed has been doing has been working. So maybe now they don't hike as aggressively as we thought. If this came up higher, guys, right? If expectations were 8 and it came up at 8.5%, I think we would have been seeing a different probability rate on the bar chart above. But now, since we got the lower number, the market changed their minds on what the Fed is going to do. We saw a nice rally to the upside. But guys, the Fed may not like this. The Fed may see this and be like, whoa, 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 equities are rallying, even the bond market is rallying. They don't want to see bonds rally, because when bonds rally, yields come down. When yields come down, mortgage rates come down. If mortgage rates come down, the Fed is at risk of actually restarting the bubble, right? The Fed may not want that, right? They may want to keep people's bullishness suppressed until they actually get inflation under control, because this is only one reading, right? They want to see multiple readings. So if the Fed comes out in the next couple of weeks, right, with their meetings and starts talking really, really aggressively to put the fear of God in the market's head, right? If the Fed starts talking really aggressively and everybody thinks, oh my God, we may see 75, well, then the market is going to unprice this. And how does that relate to Bitcoin? Well, we just talked about how Bitcoin is sitting at a very, very important key level, right? Bitcoin is sitting there. If it breaks that level, well, we are seeing 10K, 12K Bitcoin. So that is something we have to keep in mind. If we start seeing hints of the market getting spooked out because the Fed starts coming in and talking aggressively to get the market to think, oh my God, 75, 75, 75, well, this is going to start coming down. I honestly think, guys, that one of the reasons we are not seeing Bitcoin already at around 12K is because of the bullishness in the equity markets, in the bond market, etc. So if we had bearishness all across the board, it would have been a bit scary for Bitcoin. So yeah, keep that in mind. With that, actually, let's go ahead and switch on over to the Bitcoin charts. I hope you guys found this section useful. If you guys did, by the way, please take some time to let me know in the comment section, and also hit the like button. It goes a real long way in keeping me motivated in doing this kind of content. All right, so here we are at the Mango dashboard, and I want to start here because I found something this morning that got me little concern that I want to discuss with you guys. So you guys can find this dashboard at app.mangoresearch.co. There's a free version that you guys can play around with. And what we're looking at over here, guys, is the 12-hour time frame on Bitcoin along with the volatility reading. Okay, now you guys can see the volatility has compressed, and this is also lining up with what we're going to look at on price in a bit. Okay, so now the trend is short. The trend has been short for around 9 days. If you guys took that trade, good for you guys. You're up 16%. I unfortunately did not take that trade. And what's concerning to me, guys, is the fact that now we also have the bearish Ichimoku trigger, right? So we have the trend that is short, right? Came in nice and early. We got the volatility that is nice and compressed. Because remember, guys, volatility compression leads to volatility expansion, and we usually lean towards the direction of the trend. So volatility expanding to the direction of the trend means further downside move. But now we also got the bearish Ichimoku call 2.5 days ago, and the death cross over here on the 12-hour time frame. The Bitcoin I'm reading over here, guys, on the 12-hour time frame is very, very concerning. But hey, it actually gets a tad bit worse. I'm going to switch on over to the charts over here, okay? Now we're looking at the oscillator template, looking at the RSI as well as the stochastics. And if you look at the RSI settings, you guys can see that we have bearish divergence that is triggered. Bearish divergence that is triggered. So at the very least, I'm expecting a move down over here to around 16,200. One could argue, okay, in all fairness, one could argue that we already saw that move, right? Because of this wick over here that we got at around 16,300. You could argue that. But I don't know. I think we actually come down here, and there's a chance that we actually even break further down, because this bearish divergence is coupled with the fact that our stochastics are moving to the upside while price is moving down. So you could call that divergence, but I'm calling that weakness. Okay, I'm calling that weakness. I'm not liking the look of this 12-hour time frame whatsoever. Okay, if you look at the daily too, okay, it's looking like a bear flag, right? Looks like a bear flag that wants to see continuation. Now, I would love to be proven wrong. I would love for all of this to flip to the other direction and take out all the stops at the upside, but we have to call a spade a spade. Not liking the picture of this, and until we see strength, we have to be on guard, okay, for further downside. And again, the market's reaction to I'm talking about SPY over here, right? The market's reaction to what CPI data has been reading might get the Fed a little bit concerned. We might start seeing the Fed react to how the market has reacted, and this may come down, may lead to further downside in Bitcoin. Now I'm hoping that we can see further uncorrelation between NASDAQ, SPY, and Bitcoin. But again, we can't. Hope is not a form of risk management, right? So this is how I'm reading it, guys. Okay, this is how I'm reading it, and until we see a change in behavior on the lower time frames, right? At the moment, the lower to mid time frames, will dictate whether or not we break the higher time frame trend, and the higher time frame trend is down. So yeah, that's my read, guys. But again, like I said, there's massive opportunity, because if you capture a good entry on this potential short trade, okay, there's some nice gains to be had all the way to the $10,000 to $11,000 mark, right? Let's say around 30 to 35% to the downside. Even if you're holding on to deploy a spot, right, that's a lot of cheap Bitcoin that we are all getting to purchase, guys. Prices that I thought we'd never see again, right? Prices that many people thought they'd never see again. And guys, remember, the only reason we are getting this kind of opportunity at such low prices is because the market made a mistake by trusting a centralized exchange with all of its funds. This is going to be one of crypto's biggest black swan events. How much would you give to go back in time and be able to buy the big Mt. Gox event? We don't have the Mt. Gox event over here on the Coinbase chart. Coinbase wasn't alive back then, but if you look at the BLX chart, you're going to see that you'd give a lot to be able to buy that kind of market opportunity, right? So this is kind of what we're looking at. This is what I mean by, as a trader, as a hodler too, as a spot buyer, you are seeing opportunity across the board. As a trader, you're seeing a big move towards the downside, increased volatility, big gains to be had. As a person waiting with fiat to deploy all of that cash, there's a lot of cheap Bitcoin to be bought. But hey, again, none of this is financial advice. My name is Sean Dexter. I hope you guys enjoyed this video. If you guys did, again, please let me know in the comments down below. It takes a lot of time to put all these slides and analysis together, and would go a long way in motivating me to keep this content up. I will see you guys in the next video. Do it the mango way, do it the easy way, do it the stress-free way. Ciao.